improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim Paola and Johnny C. live on Real Radio.
Ain't gonna work?
No, nope. That's okay. Let's try it one more time. 1, 2. Okay, thank you guys. Thank you, everybody.
Is that better?
It's better. Hey, it brings up the energy a little bit, too.
I think we need a composer or director. So we're all looking at one person leading the rhythm.
Yeah.
Maybe we have
be
Johnny. Maybe it should be Johnny. Yeah. And the other thing is that
you're so lucky to early.
Your mic isn't working, Johnny.
It's not.
Yeah.
That's so funny.
Even better. We're gonna have to do it
all this stuff
all over again.
Yeah. Is that one working?
No.
Try 5.
Johnny's mic isn't working, everybody. So just give us a few seconds. Sorry about this.
Hey.
You want to use mine?
Interesting. Timothy is
Johnny, you're being silenced.
Yeah.
Yes.
No.
Like
Oh.
this?
It's going on.
Nothing.
Dead board. Okay, Mike, can you?
I can share with Ross. Can I
There we
share
go.
with Ross? There you
Yeah,
go.
go
That was
ahead.
working.
Oh, it's working now.
Yeah. Five in that main one are not working. All right. That's great.
Which one's
But Ross
working?
is.
Yeah, you're on.
Ross is working.
Oh, I thought you meant Johnny's is working again.
No.
All right.
Okay,
It's
So
working now.
do I need to?
Okay.
1, 2. Do we need to do that again too?
no, we're aborting it right now.
Total abort. Man,
Total abort.
I was gonna say you're so lucky you tuned in early because this is where the gold.
Oh
is.
my God.
Hey, Florida Talk Real Estate on a Saturday. Thanks for being there. 92.1, 101.7, iHeartRadio app, streaming. If you're streaming, you got to see it all too. That's on Facebook and YouTube. Man, it's great to have you with us on a Saturday. Johnny C is me. Hi. Jimothy's our producer extraordinaire. He's running.
I'm back. I'm over on this side now.
Yeah, he's running all around because 2 of our 5 mics don't work this morning. But it might be an easy fix. And Jimothy's in here trying to make it happen. No potty mouth in here, all right? Talking to Mike Rauch, the mortgage guy from the mortgage firm. Of course,
Yeah.
he's part of the very important people. Johnny C, that's me. I think we did that already. Hi.
Yeah, there's no one on the dump button right now. Oh,
How are you?
wow.
Hey.
Yeah. The what was I gonna say? I forgot.
Ross's mic
Good
sounds
morning.
way louder in my head than
Oh,
my
yeah?
mic normally does. Yeah.
You get it plugged in, Timothy?
You got a nice mic, dude.
Timothy's rebooting
Nice
this studio right
mic.
now.
I don't think it is.
I forget what I was going to say.
I'm
So
sorry.
Let's go back to my normal. Good morning. Yeah,
Good morning.
it's the people. Normally, you have to wait for like a behind the scenes clip
Right.
to get what they just got this morning. Right.
Like this is director cut stuff
Yeah,
type
yeah,
stuff
yeah.
that you get. You get to see all the behind the scenes, all the ad
Oh, I'm
lib,
sorry.
Yeah.
right? But
Quite
tuning
the privilege for the people who are here in the first.
in early has its
minute.
privileges.
Yeah.
That's right.
Yeah.
Also, let's say good morning to man, the guy that's so awesome in so many ways. Even give me his microphone on a Saturday. Brightway Insurance, Juno Beach. You'll find Ross Komarinetz also on a Saturday with us. Hi, Ross.
Oh, well, it's nice to see you and share a mic with you.
Glad you went to
Listen,
Ross because Jim was busy for a minute. He
Yeah.
had Jimothy under there.
Jimothy
Yeah.
was on his knees,
Yeah.
hands and knees.
In front of Jim.
That's usually before we clap.
Yeah.
Like that.
All right, I'm going to share my mic with Johnny again.
So, and then we'll say good morning to our fearless leader. 13 plus years now, I've told you he runs a top producing Keller Williams team, the Florida Home Pros team. Keller Williams Innovation. There's Jimmy D. He's over there somewhere.
Oh, the whole thing's down. I'm out.
We're all done.
We're all out.
It's just
No, you're
end
not
the
out.
show.
I'm out. I can't hear anything.
Now you can't hear anything.
I hear no audio. Do you
Nothing
guys hear
has
me?
changed. Yeah.
I'm
yeah.
out.
I hear you.
You sound good.
Yep.
Okay.
Yeah,
I
well,
hear you.
sorry,
That
guys.
That could be your head.
We're working on it. I wish we had that little thing like on TV. Remember the little things on the screen? Oh, it's back, Jimmy. I can hear it again.
Nice. Whatever you did,
Yeah.
did something.
It worked.
Do it again.
Oh my God.
We'll find out in a second. Hey, morning, Jimmy D.
Good morning. Good morning.
Hi.
So your mic is not working, correct?
Jimothy's going
Just
back in
working?
there
Okay.
into the big boy room. You want to try it?
Try that, Mike.
How you like that? How you like me now?
No.
No.
I got a little bit. Nope. Sorry about that.
That's
No.
right.
Nope.
No, you
False alarm.
You get
Okay.
into that. Yeah.
Okay, we're going to have to punt today. So everybody on Facebook and YouTube, sorry about that. We're going to have to do the best we can with what we got. So we got a lot to talk about today. I'd like to talk about interest rates, Mike, because we haven't talked about it in a couple of weeks about what's been happening and what might happen in the future. There was some news about that this week about people changing their mind again on whether we're going to have a rate cut in December. So we're going to talk about that a little bit. Sorry about that. We also are going to talk about thank you, Jimmy, for trying to make this work. We're also going to talk about how old first-time home buyers are.
I heard that.
I know, isn't that interesting? We had some stats on that today, and I thought that was interesting. And one of our people, we're going to talk about it in our shout-out. One of our people, David, who's closing on Monday, is 57 years old and a first-time home buyer.
Oh, yeah.
And that's kind of keeping in with the trend of this article.
Well, I'm
that
sure
we're
he's
talking
way
about.
outside of the
Well, we'll find out.
line that they said. All right.
Well,
all right.
we'll find out. Maybe, maybe not.
Well.
We're also going to talk about HOAs a little bit. We'll probably start off at that right after the shout out. So I'll get into that a little bit. And foreclosures are still going up, I think, for the 9th or 10th month in a row.
Mm-hmm.
Foreclosures have been increasing month over month.
Should we talk about the 50-year mortgage?
Yep. And that's the last thing we're going to talk about is the 50-year mortgage and
topic.
about the ability. I'd love to talk to you about that because I really don't know much about it. Didn't have time this week to read about it. So all I heard was 50-year mortgage and then later something about portability mortgages, moving your mortgage around with you, like you carry the
take it
mortgage
with
with
you.
you. Yeah.
Interesting. I like that.
So we're going to talk a little bit all that. But at first, let's go ahead and do some shout outs and some teachable moments, if you don't mind. Let me
Nothing
see here.
anything to do with radio equipment in there?
Yeah. It's like, I can't believe that we're going
Because you don't know what's going on right now on Ross's camera, if you're watching. Because he and Johnny were sharing that mic, it got unspun and it disconnected from its pivot point there, or whatever you call that.
Well, at least the building isn't leaking anymore.
It
Remember
was
how
last
many?
week.
Was it the building? Oh, that's right. We had a leaky building last week. I forgot.
Hold on.
I always think about the windows over here, the exterior windows, not the internal leak.
Ever since we started this clap thing, Jim, everyth's been going
Yeah.
haywire.
Yeah.
Are they both working?
No,
Oh, I thought
neither
they-
of them.
Oh my God. And Johnny, well, let's start off with this. If you get our weekly email from the show, and if you don't, you should sign up because there's a lot of really good information. It isn't just a recap of the show. We're talking about what's happening during the week and some things. Last week, I think I put out like 7 people that called us to ask for different types of services and stuff.
Okay.
But the funny part is, and I hope Johnny doesn't sue me right now for defamation, but the headline on the subject line for the email was Johnny C's got the clap.
Oh, yeah.
And it's contagious.
Yeah. Probably not the first time.
And
either.
we got about
Again?
we probably got about 20% more clicks than our regular.
Nice.
So Johnny,
So you know what that tells? They care. That's what it tells me.
and you
that
know
they
what?
care.
Johnny's a public figure, so I don't think he'll be able to sue me anyway.
Oh, that's right.
He's
That's
a public figure, so
Or the trend.
I had crabs once. It's awful. You got to buy that cream that comes with a little comb. Of course, I can still use the comb.
Giggity.
So let's get into a little bit of the shout outs. I want to give a shout out to Kathy and James. James
Okay.
has been a big fan of the show. He referred us to a person recently. The deal didn't end up working out, but I really appreciate that James referred us out to somebody. And then his mom needed to be put into a retirement home. I'm going to call it that because I don't know if it's assisted living facility or not.
Sure.
But she needed to, they decided it was time to sell the unit. So we put out a little short video on Facebook saying, all these people complaining that they can't afford to buy something. This was a perfect unit. It was a 2-bedroom, 2.5-bath townhome. It wasn't like brand new everything. In fact, it was pretty original, but it was squeaky clean. You could move in and upgrade it as you felt like it. Everything was in really good condition. And we priced it based on how dated it was.
Okay.
We put it on the market 3 days later, was under contract full asking price with a with a buyer.
This is the one Nancy asked me to work up a flyer.
Yeah, you haven't done it yet. Thank you,
well,
Mike.
I needed clarification on what you were looking for. And by the time I was saying, hey, wait, I can't quite put it together. I need more info. She was like, yeah, never mind. We already got it under contract. So
Yeah, sorry about that, Mike.
Hey, that works out.
Yeah. I got to tell you this. James was really happy because when I called him about something a couple of days ago, and James said to me, yeah, I have never had a good experience with the realtor, because I was asking some kind of questions about something. He was like, yeah, I have never had a good experience with the realtor. That's why I called you. And I was like, wow, that's a very nice compliment and nice sentiment.
Though.
Yeah.
Make sure you do things the right way.
Yeah, we got it done right away. And thank God that they listened to their professional as opposed to the neighbors in the neighborhood. When the neighbors heard what we were trying to sell the house for, one of the neighbors went over there and said, oh, you're way off price on this unit.
Did they think it was higher or lower?
They thought it should be way higher.
Yeah.
And if we put it out at the number that person said, those were the units that were newer kitchen, newer AC, upgraded bathrooms, maybe vinyl plank flooring, that kind of stuff going in the threes. We put ours at 250, right? And there were units that sold just recently, 220, 222, 235. So we put ours at 250. And those 220s and 230s, they weren't in much worse condition than ours. And I don't mean to say worse condition, because I got to tell you that
yours was move-in ready.
It was
if
turnkey.
You were okay with the
it was
original.
and it was like everything was in perfect working order. So anyway, we got investors coming in right away. And I was really hoping it was going to be a first-time home buyer, and that's who ended up buying it, was a first-time home buyer. And I was really, really happy to see that a first-time home buyer got the property.
What age?
Don't know yet. I never met the buyers, but what makes me happy is that there's so many people out there complaining that there's an affordability issue and everything. And this is a unit, Mike, if you were buying one of those units for like 250-ish, because you've done so many deals like that, that type of community, you probably need like what, $13,000 to $18,000 down if you're a FHA buyer.
Yeah, if you're doing low down payment, total out of pocket would be in that range, maybe like the 13 to 50. Is that what you said?
Yeah, I said 13 to 18.
Okay.
Yeah, somewhere around there, 13 to 15.
But I mean, you might be doing 5% down on conventional, so you would have a different. Bigger,
but let's just say FHA would probably be 15, right? 15 would be roughly.
Yeah, I'm happy. I'm satisfied.
That sounds like not a crazy number. So if you got 15, check this out. If you get the Florida bond program, not even the Hometown Heroes, you get 10 of that right away. Now all you need is $5,000 to move into the place.
Yep.
That's like first class security for a lot of people.
There's actually a program. It's HFA, so Housing Finance Authority of Lee County, which has some reciprocity with Palm Beach.
I remember that happened a long time ago.
It's $15,000.
Wow.
Now, it's not the forgivable one,
right?
But it's $15,000 if you're in Palm Beach County. So it's maybe at that level, it's on par with what you would get with Hometown Heroes.
Again, another reason why I love this show. I learn something every day. I learn something every time I go on this show. So that is a great tip from Mike Rauch. If you want more than the $10,000 bond program, and you're looking to buy in Palm Beach County, and you're a first-time home buyer.
Yeah.
First-time home buyer means you haven't owned a primary residence for 3 years, right? You might be able to get $15,000 instead of 10. Now, if you were doing FHA financing and you had $15,000 out of pocket to buy a $250,000 unit, and you were getting 15 from the state, you really couldn't use all that money, right? Because you have to put some skin into the game yourself.
So down payment assistance counts as borrower funds. So what Jim's talking about is you have what's called a minimum required investment, which is essentially the down payment, right? So if you're doing 3.5% down FHA, the borrower has to come in with their funds to meet that 3.5% down payment requirement. So, and that could be their own funds, but down payment assistance counts as borrower funds, just like gift funds from family would count as borrower funds. So those are all kind of like under that minimum required investment umbrella.
Awesome.
So to answer your question, no, you don't have to. It's kind of one of those where if you're in that price point and 15,000 gets it done, you don't have to bring in anything. You can save your money for, furniture or moving expenses, or put it in the bank.
I'm sorry, I'm laughing at Johnny because he's sitting there.
I heard something.
I heard something.
Something just happened. Oh, I thought you were like teasing it into existence.
I heard it too, but it wasn't what we hoped.
Okay.
Yeah, who knows?
I'm trying to mess around with these.
He's touching stuff.
I like how Ross is just swinging the mic like he's a pro now and puts it right in front of Johnny. Just swings it over there.
I feel naked. Like it feels naked just sitting
It feels weird, right?
Like we're all looking at Johnny. Johnny's looking at Jimothy. Who does Jimothy get to look at?
Yeah,
Nobody.
Is there
he
anybody?
gets to look at the board
Call
and be
in.
frustrated.
I'm under the table.
Yeah. So
It's funny because you're using that host mic. I hear it in queue, but it's not going over to you.
that's
Seriously,
so
you
weird.
can hear like my little
Yeah,
everything
it's
I'm
playing
doing
in
for you.
queue over here.
Do you
So
think
it's
it's
actually-
related to that thing? What happened if we unplugged it?
This?
Which thing?
The Ozbot.
It's not plugged
It's
in.
not
That
plugged
that
in.
Ozbot isn't plugged in.
Oh,
It's
okay.
right here, Jim.
Oh, okay.
Yeah.
I thought maybe it was plugged in the board or
No,
something.
something got rewired.
Sorry about that, everybody. We're just gonna have to
That mic is completely unplugged.
Can we still take callers right now, Jimothy?
Yeah.
So
Well,
if there's any radio techs out there,
Yeah.
give us some ideas.
fingers crossed.
Johnny needs a microphone.
Yeah, any engineer that was in here hooking up cameras the other day, you want to give us a call at 877-927-6969.
What about if we were going to call for anybody who used to work here? Like, how old is the technology in here? Like, if they worked here 20 years ago, would it still be applicable?
Seems like old times.
Yeah, I would imagine it's changed a whole lot as far as wiring. You know what I
If
mean?
you've
It's
ever
some
worked here
same
at this
principles.
building,
Yeah.
right?
Yeah, really.
Ever.
Well, I mean, Jimothy's kind of gone over everything.
Yeah.
And I don't know. I don't know that it's quickly fixed. Because again, he can hear a little behind the scenes. He can hear my mic in queue.
Yeah.
Which means it's not going over the air. It's like in his headphones.
Yeah.
But it can't get it on the program side. He can't get it over the air.
I don't know why.
Yeah.
Probably a resistor somewhere.
There's some
Mhm.
kind of. That's exactly right.
Resist.
Yeah.
I think it's one of those tubey things like on your TV.
Oh,
in the
like
1950s. The cathode ray something. Cathode. Is
cathode
it-
ray tube, this
Yeah.
CRT. But no, you're thinking of geez.
I don't remember what it is.
The tube. I don't know if they were resistors or. Geez, hold
What-
on.
what do you
It'll
mean?
come to me.
In the
I
back
don't
of the
remember.
TVs?
Yeah, on the tubes. Remember
No.
that? The tubes in the back?
Old radios.
Oh.
No, I'm thinking of TVs where they have the tubes. Anyway,
Yeah, I don't
Um,
know. That's
yeah.
I don't know that I've ever seen the back of an actual TV that had a tube in it.
yeah, let me
That tells you what Jimmy used to do. He used to take those things apart. He's telling us right now he used to take those things apart. 877-927-6969. Toll free. You're welcome to join us on this. Today's the 16th of November. Am I right? Accurate?
15.
15th.
15th.
Jumping
There
ahead
you
a
go.
little bit.
Mhm.
All right, 15th. We are live. And yes, these technical difficulties are happening on the fly, but you can be a part of the program. Technical difficulty free. Just dial in. Jimothy will line you up there. Of course, if you're not comfortable on the radio and you need professional guidance, anything that touches the world of real estate, always remember FloridaTalkRealEstate.com, your one-stop real estate shop. Pros, you get experts in their field. We may not be able to get these mics working on a Saturday in here, but that's not their professional choice. That's not the field they chose to be in. Jimothy, on the other hand, that's his choice.
Mhm.
I didn't choose being an engineer.
No, you're right. No, actually, I chose to get the hell out of here. Actually, but thank you for being with us on a Saturday. Always remember that team is there for you, and you can be a part of the program. Don't be shy, even though we're having a little issues on our end. Thanks for coping with us. Oh yeah, and live stream. You can check it all out too. Facebook and YouTube. Florida Talk Real Estate on Facebook. Florida Talk Real Estate LLC on YouTube. Home of a ton of informational chunk videos. Get that stream going too. Always there to check out on a Saturday.
Thank you, Johnny. couple other things I just wanted to mention of what's happened this week over at the Florida Home Pros, my realty company. We put out a couple of properties this week. We put out James and Kathy's and got that under contract super fast. Just to wrap up with no, we talked about it. I'm sorry, everything's a little crazy. We talked about first-time home buyers and why it's a great deal. There's still great deals out there for buyers, and the interest rates are low for the last 18 months. We're still very, very low. Even right now with the interest rates scooting up a little bit, we're still low over the last 18 months. So this is still a great time to buy, and the sellers are ready to work with you. Even in that case, the sellers accepted a seller concession where they're giving money back to the buyers
Mm-hmm.
in the process of buying the house.
What kind of percentage?
Let me see, about 3%.
Okay.
About 3% is what they're getting. And it's working out good for everybody. Now we still got to do the inspection, appraisal, everything, but congratulations for going on contract. And I think that we got a good deal going there.
Nice.
Also wanted to do a shout out to Tom and Mike and the crew over there. We had a house over by Lake Osborne, and it was a 3-bedroom, 2-bath home. It was built in the 50s. I love this house because it reminds you of old Florida. It has the terrazzo floors, which are my favorite. I love terrazzo floors in Florida, as long as they're in good shape. And these were fully polished, ready to go.
Nice.
And anyway, we just got that under contract. I'm really, really happy for that. We did have one price reduction in that process in order to get the house sold. But the sellers were motivated, and we got the house sold, and it was right around where I thought it was going to land. They scooted up a little high at the beginning.
I had some buyers. I tried to get them to go and look at that. Then I think they must have drove by and just, for whatever reason, wasn't the right fit.
And the person buying it is an investor that's buying that one, which is little. I mean, I'm happy that the house is sold for my clients, but I always like it when regular buyer goes regular buyers.
Sure.
Yeah.
Also wanted to do a shout out to Laura and Ambrose. We have a Century Village property in West Palm. Century Village is a premier 55 and over community in West Palm Beach. I think there's like 6,000 units over there. It's a big, gigantic community. And
is it that big?
Yeah, it's 6,000. I'm pretty sure is what they got over there. Like Kings Point and Delray is 5,000.
Yeah, I guess so.
And there's 30 something buildings over there, and it is a premier 55 and over because of affordability. Most of these units are going well under 200,000, and some of them are going under 100,000. Ours is a 2-bedroom, 1.5 bath. We have it at 149.9, and it's in very good condition. And it's on a first floor, which is really great for people who don't want to have steps, because a lot of these buildings don't have elevators in Century Village. And the other thing great about Century Village, other than being located centrally in West Palm, is the amenities that they have there. It's just really amazing. They have multi-million-dollar theater over there. They've got heated pool, regular pools, and almost any activity you can think of, there's always something to do over there. So go out if you're looking for an affordable place to move to Florida. Like if you're listening from out of state or something, this might be a really good opportunity for you.
Yeah.
We also put up the Airbnb property. And I made a mistake last week, guys. Last week I said there was already $27,000 in prepaid bookings for this season on this 3-bedroom, 2.5 bath Jupiter Beach townhome. I was wrong. I had a fact error. Sorry about that. It's $37,000, not 27. So if you buy this unit, obviously before the people come in for the stay, there's $37,000 that you're going to be getting back from VRBO and all that stuff that's prepaid and ready to go.
Already booked.
Yep. And they've been without hardly any advertise at all. They've been booking about 40 to 50,000 a year with this unit. It's 3-bedroom, 2.5 bath. I just went through all the upgrades because this is a smart townhome. So what that means is you can control your energy efficient blinds by your phone. You can control your HVAC system by your phone. your security system by your phone. And I think there was one other
Probably
thing, shades.
door cameras.
You control your phone by your phone.
Yeah.
By your phone.
Yeah.
Yep.
So that's a smart home, and she broke
That's
down. Jamie is the owner, and she broke down how much she put into that house when she bought it in 2022. She put $208,000 into the upgrades of that house, so it's really, really nice, and that's why it's such a great Airbnb. And the other thing is, at the full asking price, which is $795, they're throwing in all the furniture, so you have a turnkey operating Airbnb. The community allows the Airbnb. Daily rentals are okay. This is something that's not under the radar. They're like, sure, you want to rent it out by daily? Go ahead. Your short walk to the beach. Ross, you live in that whole area. You own that area. This area over right by Jupiter Bay and Jupiter Lakes and all that. It's really close to the beach. It's close to all the parks. It's close to the pier.
It's super close. I actually drove. I was by there right on that side of Carlin Park this morning, where like all those pickleball courts are, and you can see the townhouses right there.
Yep.
Now I was looking at it, and I thought about, I thought about that unit this morning as I was looking at them. They are right next to the beach.
And now that you know there's 37,000 already booked, you gonna drive by and take another look at it? As far as financing that type of property, Jim, when you do like what I'll call short-term rentals, like the regular conventional Fannie Freddie don't play nice with the short-term rentals and that type of use.
Right.
But there are loans that you can do. The DSCR. I don't know. We talked.
We've used them in the past. So it seems like a lot of people are using them right now. Well, let's talk.
But
about
what's your loan? What's your capped loan amount for them?
So there's not going to be a max loan amount.
There isn't.
You talking about LTV? So loan.
I was just thinking, because isn't at some point it considered like a jumbo loan?
So not in the DSCR world. So you can do DSCR.
What is
kind of is no.
What
because
does
if you're
DSCR stand for?
DSCR is okay. So when you normally qualify for a loan, you're qualifying. One of the questions we ask is, what payment do you qualify for? The way that we arrive at that maximum payment, we use debt to income, DTI, right? So it's a ratio, debt divided by your income. You can use whatever. There's a percentage there. So DSCR is like that. So when you, instead of qualifying with DTI, you're going to qualify with the DSCR, which is the debt service coverage ratio, which is just a real fancy way of saying, does the rent cover the mortgage? So we're not looking at your debts. We're not looking at your income. The only qualifying factor for what payment do you qualify for is how much is the rent, and is it equal to or greater than the mortgage payment, right? Which is principal, interest, tax, insurance, and HOA, right? We call it PITI plus HOA. So if the rent, and you've already got some numbers on the rent, let's say the rent was $8,000 a month. As long as your mortgage is less than $8,000 a month and you have the cash to do it, you can buy the house.
How
as
many
an
months
investor.
do you have to show? How many months do you have to show that you're doing that? So let's say you have an Airbnb, and in January you're making $8,000 a month, and then in June you're making nothing.
If you want surefire, use the rental history as the number. You would want probably 12 months of history of. So the last year of what did you bring in for bookings with your short-term rental status. The traditional way to do it is just like have the appraiser tell you what the monthly rent is on an annual basis.
So, but it's a, excuse me, it's how much you make on a year. It's not month to month. It's for the year.
Yeah, they'll average it over a year. So you give me 12 months.
If you have like 3 months, there's like one season where it's
that's okay,
hot and you make all the money for that Airbnb.
Which is why they want to look at the 12-month window, because they really want to know what it looks like over a year. Now, that's not the only way to do it. You can also do there's analysis tools out there that say, hey, here's what we think this unit is capable of bringing in. And so that might, if you're using that instead of the history, it might like impact your rate a little bit. But essentially these types of loans are popular, Jim, because they're easy to do. You don't have to I'm not analyzing your income in traditional ways, and I'm not really concerned with any of your other debt obligations. So this loan is really geared towards the house itself and how it performs from like a cash flow analysis. Of course, the down payment, you can't do it with a low down payment, right? Like you got to be thinking 20% down minimum, and your credit scores need to, you're not going to be able to do it at the low credit scores, right? So you're going to have,
7.
Yeah. 720, 680 maybe is like, it'll impact how much you have to put down. So the higher the credit, you're going to be at the 20%. If you're on the low end of the qualifying credit, maybe you got to do 25% or something. So if you got the cash and the place is very easy, you have $37,000 booked already for some period of time. That's a good baseline. Compare that against what you think your anticipated mortgage payment's going to be. And if you got the cash to do it, it's a slam dunk, easy to do loan.
So this unit, thank you, Mike. This unit would be perfect for a person that just wants to use the unit during their vacation time, but don't want the house just sitting there doing nothing while they're not there. This is a really great opportunity for that person. It's also a great opportunity for somebody who just wants to live at the beach and not rent it out.
Oh, sure.
Right? The house is gorgeous. You're in a great area of Jupiter Beach. There's so much stuff. What Ross, because you've been up there for so long now. The marina where they have like jetties and those bars over there, the bars and restaurants over there by the marina and everything.
Right,
Do
that
they
like
have
Love Street.
Yeah,
area,
Love Street. Do they have a name for that? Because I made up a name for it.
Love Street.
I believe it's Love Street.
Well, I called it the Jupiter Marina downtown, Jupiter Marina Entertainment District.
Oh, the
JMET. I made up my own.
It's the
I called
JMET.
it the Jupiter Marina Entertainment District.
JMET.
So,
Yeah.
hey, city, you can take it if you want to. Take that name. I think that would be a better name for it, to say, hey, come on down, because there's so much to do over there. So
You're against love?
I'm sorry?
You don't like love?
Yeah, I'm against love. And the other unique opportunity with this property is that you could actually spend the night in this property before you decide to make the offer. You can go ahead and book the Airbnb, see if you like the place or not, see if you like the area, and then decide if you want to buy it or not. We have the link on our Facebook page. I don't have the photo on there yet because I suck at tech, as you can tell from this morning. So check that out. And congratulations to Jamie. She's on homes.com. She's already ranked as, quote, very popular property.
Nice.
So that's pretty cool.
I'm sure that helps.
Yes. Let's go ahead and take a break, guys. And then on the flip side, since we're taking the break right now, let's go ahead and do the clap.
We're going to clap.
We're going to clap
Who are
one
we
more
watching?
time. So the good
watching
part
Johnny.
is we're going to watch Johnny, but Johnny's on camera, so this clap will work.
Okay.
Okay,
There
so
we go.
Johnny's got the clap. Ready?
Are you ready?
Yes.
Everybody's ready.
Yes.
And
Put your hands in front of the camera, guys.
Everybody feels good about this.
Yes.
All right. 1, 2. Jim.
I was slow.
Jim.
One more time.
Wow.
1, 2.
Okay, perfect. Thanks, guys.
We're going to keep working on trying to get our other mics working. Thank you very much for dealing with our nonsense as we cope on a Saturday with technology. Hey, it's a beautiful thing, but when it doesn't work out well for you, man, does it make it tough on you from time to time. I don't care what it is. It is technology is beautiful, and when you get used to it and it doesn't work, it makes it rough. Even simple old school technology like my microphones and cameras and things. But thank you for toughing through on a Saturday through our nonsense. Always remember, Florida Talk Real Estate is .com. No nonsense there. That is a team of pros, experts in their field, literally working cohesively together. If you've ever experienced it, man, it's amazing. When you can have a team behind you when you're buying a home, selling a home, stuck with your home, you don't know what to do. These are big time movements in your life. Some of the big financial moves that you're going to make. Probably the biggest. The reality is. You got to have people that are great at what they do. Good at what they do is one thing. Great at what they do is another. Get great at FloridaTalkRealEstate.com. Know it, use it, love it, share it. FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's the latest with weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. Expect a pleasant remainder of your Saturday. Temperatures will get into the 70s and low 80s with a mostly cloudless sky under high pressure. We are going to see an onshore breeze persist, leading to a moderate risk for rip currents at all of our area beaches.
This report is sponsored by Mattress Firm. this Veterans Day and every day with 10% off eligible purchases with no annual limit. Thank you for your bravery and service. Verify today at Lowe's.com/military. 10% discount can't be combined with another offer. Exclusion terms and conditions apply.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
Real Radio 92.1. We are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, you can dial in 877-927-6969 if you have a question, comment, concern in the world of real estate. You want to get involved in the conversation at hand, or you just got something you want to bring to the table. Do it. You're more than welcome to. Plenty of time remaining on this Saturday. It is the 15th of November. We got an hour and a half for y'all. Ease on in. Remember, we live stream as well, Facebook and YouTube. You can find us both, Florida Talk Real Estate on Facebook, Florida Talk Real Estate LLC on YouTube. Live stream happening. And thank you for choosing to be there. Johnny C is me. Jimothy's our producer extraordinaire. What's up, my dude?
Hello, and good morning, gentlemen.
So I saw the flash of the lights earlier, so somebody's at least called in. Phone lines seem to be working. That's not an issue today, right?
So far, it seems like it. Yeah, let's give them a shot. All right.
Everything looks good. Nice.
I heard dial tone.
That's what we're looking for.
At least that's working.
Okay, good. So you're more than welcome to join us, please. If you've got a question, do not be shy. Of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. Your access to the entire team. I'm talking pros, like Mike Rauch, the mortgage guy from the mortgage firm. How are you, my friend?
Yes, I'm doing great.
Excellent.
How are you?
I'm so good.
Yeah, you like that mic? That mic looks good on you. Silver.
Does it? I had a little mic envy when we first got going. Yeah, right out the gates.
Like, wait a second.
Yeah,
Look at this.
Nice.
Your voice sounds so smooth.
Doesn't it though?
Yeah.
Yeah, processing all
Like
this
olive oil.
Yeah.
Yeah.
I like
Extrovert.
pros, like Ross Komarinetz with Brightway Insurance. Juno beat.
Oh, hello everyone. It's weird having to share.
Ross, the mic looks so good.
Yeah. Yeah, man. I'm glad to share it with you. It's like that one time we shared Mike that weekend
Oh,
in
geez.
Miami.
Wow.
Sharing mics.
Was that Miguel?
No, it was Mike.
Mike.
As the night went on, he became Mikhail. It was weird. You remember that, Ross? It was awesome. And Jimmy D is one of the pros over there too. The Florida Home Pros team, Keller Williams Innovations. You'll find Jim DePola. Jimmy D, how you be?
Hey, I'm doing good, guys. I love the show. We were just talking about that Airbnb, potential Airbnb, if you want it to be that way, in Jupiter Beach, 280 Bella Vista. Just had somebody requesting a showing while we were on break. So
from the show or from your other?
I can't tell. It was an agent. Maybe it was a coincidence. Maybe the agent heard us. Like, let's go check it out.
Coincidence happens, but probably listening, because who isn't?
Yep, exactly. Who isn't listening?
Seriously,
right? You're not doing the right thing if you're not listening.
Well, you might as well throw out the address one more time, Jim.
280 Bella Vista Court in Jupiter Beach.
Nice.
Yeah.
What did you call it again?
I call it Bella Vista.
No, you called it the Jupiter Entertainment District.
Oh no, it's by the Jupiter Marina Entertainment District. Jupiter Marina Entertainment District.
J-Met.
Yeah.
J-Met.
Yep.
Love Street.
And yep, on Love Street. So wanted to go first to first I wanted just to bring up I want to do this one first because it's really sad and I just want to get it over with, but I felt it was kind of interesting. Did you guys hear about that whole Treasure Coast thing up in Port St. Lucie where this guy got in a fight with his HOA board and he went and killed two of the board, a board member and a relative of a spouse of the board member, and then held a third one hostage for 2 hours and then killed himself.
Yeah, it was
I did not hear that.
It was all about.
I've been frustrated with HOA boards before.
It was an HOA dispute. It was a dispute between the person that shot everybody, if you will, whatever. More than a suspect, the shooter. He was living in the community, and apparently he was acting unusual and stuff. And also, it got into politics, right? And they didn't really get into the article about who was on what side or whatever, which I'm so glad they didn't do that, because it doesn't matter. They're all wacky. If you're going out and killing somebody, it doesn't matter what your political affiliation is.
Sure,
you're mentally incapacitated in some way. But anyway, the bottom line is they were having these big political disputes, and then the community decided to evict the person out of the house, and he went off. And there were multiple police reports.
Is he an owner there, or you say evict? Was he a renter?
It's funny. It didn't mention in the article what was going on. So like 10:30 last night, it bugged me. So I went into the St. Lucie property appraiser and I pulled up the guy's name, and I found the house that he lived in, but it looks like his parents or some relatives own the home because his name is not on title. It looks like relatives' names are on title. So I think that's why they were allowed to evict him. I'm guessing, but the article didn't get into that. But the thing that was, it's a really sad thing, and it just shows how people's tempers can get really crazy, and HOAs can get very stressful. But one legislator, and I don't remember the guy's name, so I'm not going to mention it, but he called HOAs a failed experiment. What do you guys think about that? Do you think that, like HOAs are a failed experiment? I don't know about that. I was like, can you imagine having no HOAs? And just having developers building houses wherever they want to build them, and you could have a 4-story house next to a 800 square foot home next to,
I live in the acreage, so it's kind of somewhat like that. Kind of you do your own thing.
But you have land. But you got land, right?
Yeah.
So imagine being on a 1/4 acre lot or less. and then having anybody build whatever they want. You don't know as a neighbor.
Where I grew up
what's
in
gonna-
Northern Virginia, it was like that. So these communities were developed all at the same time, right? So you have similar style homes, but there's no HOA, right? There was no monthly dues. There's nobody.
But isn't that just any non-HOA neighborhood?
Yeah. I'm just saying. So they exist out there, and it doesn't seem to have a major
exist,
any issues.
I don't think that
Ross has a castle in his
claiming
neighborhood.
These articles now are coming out claiming that there's so much violence in HOAs, and I'm like, I
couldn't imagine living in a townhouse community or an apartment community, and your neighbor who's sharing a building with you wants to paint their house, some god awful green, and you have to walk.
That's America.
Yeah,
baby.
but I mean, it's you're sharing the wall, so I mean, I think people move into communities like that for that uniformity, or I don't know, but there are communities that exist that don't have an HOA and seem to function as well.
Yeah, I think maybe they're maybe it's not the HOA, maybe it's the gated community, the planned unit development, like that stuff where everything is meant to be a certain way, and that's part of what makes the neighborhood attractive in the first place. And so like the conception of it is we want it to be crime free, we want it to look nice, we want property values to maintain levels, we're going to have security, we're going to have rules about lawn care and plants and architectural review boards with colors and roof styles and all that stuff. And it's the whole idea is like we want to be a place where your property holds value. And so has that worked conceptually, right? Like does that make your home worth more than the non planned unit development homes? And I don't know if I could say definitively those neighborhoods have higher value homes than the non-HOA neighborhoods.
But as a person going out showing people properties and stuff and talking to the buyers all the time, a lot of times buyers will be very vocal about saying that they do not want to be in the HOA, right, or condo association, no HOA, right?
Because they've been there, done that.
Well, no, not that a lot of them have not been there, done that, but they have a attitude about it that they feel like they're going to be condo commandoed to death, HOA to death, right? No pun intended about what happened today. That was a poor choice of words.
Wow.
Yeah, I didn't mean to say it.
I didn't even think about that until you pointed it out.
I pointed it out. That would sound pretty bad. So, but the thing is, a lot of people, they're like, I don't want the HOA telling me what to do with my house. And I understand that point of view. I'm not saying that's a wrong point of view. That's, that's the way that you want to live, and that's fine. And there's nothing wrong with it. I've lived in both HOA and non-HOA, and I've seen, I didn't want to move into the HOA when I did. But when I did, I found there were a lot of benefits of moving into the HOA. You didn't have to worry about, like, if your neighbor has, is a car mechanic part-time and they got jalopies all over the place and cars with parts thrown all over their yard or whatever. You don't have to worry about that because the HOA is going to deal with that neighbor and tell them, hey, you're not allowed to do that.
Yeah.
You don't have that dispute.
Yep.
Another thing about the HOA, why people do want to move into the HOAs, they want those rules because they don't want people doing things.
You did something on the video.
No, Jimmy's doing it.
Oh.
They're trying to make sure that they don't want to have those headaches. They don't want to have the crazy neighbor who doesn't cut their lawn or has 8 million dogs or pets on the property and barking all times of night and day, or too many cars in the driveway or whatever, like all of those rules. Now, other people, it's like, I don't want to be told when I can take my garbage can out and into my house. And I don't want to be told, can I park my car in my driveway or it has to be in the garage,
or don't have your garbage out to the street a day before.
Yeah. Like all those. So there's pros and cons to both, but I don't know if I would call it HOA a failed experiment.
I mean, unless all these gated communities were vacant, then it's not failed. People live there. Like, people are buying the homes there. So it's definitely not failed.
Yeah.
Now, if you're going to get somebody who doesn't like what's happening, you probably get people who think the HOA doesn't go far enough.
Oh,
like, look at this. Our grass isn't supposed to be more than 5 inches. Look at this guy. This guy has his 6 inches.
Yeah.
I just measured it.
6.
I just measured it.
Oh my God.
Look at this. About to go to seed.
So I just wanted to bring that up about what happened up there because it has been really big news up there. There is talk that the police, law enforcement had multiple calls about this, and they said that they knew the shooter pretty well. Like he was
maybe somebody should have had an eye on him as a potential.
the police said that they just didn't think that he had a violent tendency, but there were a lot of complaints. Right. So I don't know. Well,
I'd hate to be
I almost felt like that was CYA press conference.
Yeah, it's
one of them, I feel like. And but anyway, I didn't think that HOA is a failed experiment.
Yeah,
but
I would
wanted to
disagree
bring
with that.
up.
Sure.
The other thing I wanted to talk about was the first time home buyers, Mike. Back in 1980, or I'm sorry, not 1980, 1991, the typical first time home buyer was 28 years old. What do you think it is in 2024?
So in 91, it was 28.
91, it was 28.
Oh,
82.
82, yeah, exactly.
First time home buyer. I would have, if you would have asked me what the current age is, I would say less than 28. I would say mid 20s.
Really?
So like 26.
Man, I wanted to tack on like 12 years.
You think?
Yeah, higher.
Yeah, like 40, 42.
No, I'm hesitating because the headline I heard, I didn't read anything. I just heard that the age, they're getting older, right? The first time home buyer average age is getting more than it was, but I would not have expected you to say 28 as the starting point. So I'm going to say still mid 20s. So 26, 27, something like that.
So this is the interesting part. So in 1991, it was 28. In 2020, it climbed to 33 years old. In 2024, I'm sorry, 2020 was 33 years old. 2022, 36 years old. 2024, 38 years old. And 2025, 40. 40 is the average age of the first-time home buyer right now. Wow, that's amazing, from 20 to 28 years old to 40.
Yeah,
Now,
it
this
really
is
crept
coming
up quickly there, didn't it?
This
So they're
is
just doing
coming,
it every single year. Like this is the all first time home buyers this year. This was their age.
I'm
So it's a
sorry.
yearly number. That seems, I don't know. What's their definition of first time home buyer? Is it the same as mine?
I don't know about every 3 years. I think this is, let's see. That's a good question.
Let me tell you the definition from a lending perspective of first time home buyer.
Right.
Okay. You haven't owned a primary residence in the last 3 years.
Mhm.
That's it.
That's it.
You could have bought 10 homes in your life. As long as it wasn't in the last 3 years, you weren't on title to a home that you lived in. Jim, I could own 10 investment properties right now.
Mhm.
But if I rent for my primary residence, or I live rent free with family, or whatever that situation, I don't own the home that I live in, I can qualify as a first time home buyer, even though I own 10 investment properties.
Right. I didn't know that
Yeah.
until Mike told me a few years ago about that, which always blows my mind when you get reminded about it. Most people don't have any idea
Yeah.
about that.
So
That-
what's their definition of first?
So
can't imagine it's
it
the
looks
same.
like they didn't actually say. Now this is a New York Times article, so
Oh, we all
there
know
was-
about them.
well, it was real. What I'm trying to say is it's real research, right? So it isn't like Redfin coming out with this stuff, right? So it doesn't say the definition of first time home buyer, but I believe it means for
First time
real,
ever buying a
first time
house.
ever buying a house. The reason why I'm saying that, they have first time home buyer age for the year, and then repeat buyer for the year. So what is the average repeat buyer, right? So in 1991, when the average person first time home buyer was 28, the repeat buyer was 42, right? Now we're at 40, right, for a first time home buyer. Repeat buyer, 62.
Wow.
So it went up 22. Why? Because people are holding on to their houses longer because of the low interest rates they had for so long. And that's what's happening here. So I just thought that this is kind of interesting. And it reminded me of what was happening with David. David's been renting for a long time. David is a person buying a home condo through Mike and me helping him as the agent. He's closing on Monday.
Yep.
And he's been renting. Well, actually, he hasn't been renting, but he's been living. he's been living
hasn't
without
owned
owner
a home.
property.
Yeah.
But he's 57 now, and he's realizing that he's really good at socking away money into investments and stuff. He talks about it all the time. He's really into investment. He's a city worker, and he wanted a very inexpensive condo. We sure got him that.
Yeah.
It's the cheapest condo in that whole city he bought.
You've had some success this year finding that what initially like, well, geez, how are you ever going to find that? Yeah, it's the unicorn.
Yeah.
You've had a couple of those this year.
I have had a couple. So David, David is older, but typical of the first time home buyer. I've had a lot of people. I remember Joe and Linda, who we closed the house in Fort Lauderdale a couple months ago, that when they first time home bought, they were in their 50s too. When they bought with us as a first time home buyer.
I mean, I'd have to look at my like personal stats, but I feel like that 40 number is just way too high.
Do either of you put any stock into Grok? Have you ever used Grok?
Because I have it in my
familiar
car.
with it.
I did a search, all right, and I put in using the standard of never owning a home. What is the average age of first time home buyers in 2025? And Grok came up with 40 years old, according to the National Association of Realtors 2025 profile of home buyers and sellers.
There you go.
So again,
Matches up.
if you put stock into it, I don't
Yeah. So
Grok is Elon Musk's AI bot.
Yeah, it's the AI bot for Musk. I got it in my car. I got it in my car.
Now all
that
it's
Grok
doing,
AI.
all it's doing is pulling information from the web, and the most consensus right now from articles that are written about this is about 40.
Right.
So it's just giving you kind of a lump of what's already out there.
It's just collating
It's
the
not really
research.
it's not really doing numbers.
I agree with you, Johnny. It's a lot of times it's just collating the information that's out there, and then
and if it's bad information, it's going to give you the bad information.
Yeah.
But it's pretty much saying like,
but you
that's
can
the
ask
consensus.
it. But you can ask it to only use certain types of sources and everything. You could actually do that.
Well, like Jimothy did, he kind of you can be as specific as you want, and it'll really hone in.
Can you do me a favor?
Sure.
What'd you say? What'd you say, Russ?
I said ChatGPT says the same thing.
Yeah.
So
Yep. They're all this.
Somebody better check
and
it
it
out.
cites its source too.
Yeah,
the
it
source
cites its
being
source.
the NAR.
Just tell it only use reputable news sources. I know that doesn't mean anything, but let's just say what happens if
It's an
there's a
oxymoron
change.
now.
It is.
Yeah.
No, actually, that's the world we live in. You can't trust the news.
It's all
I
copy
know,
and paste.
It's so bad. It's so bad. Well, while Jimmy's looking at that, let me see. Let me go over here.
So that seems like a weird trend to me, and I would say most of my clients who are first-time home buyers are not that age. But I'm being anecdotal a little bit. I don't have like stats on it. It's a curious number for me.
The national media right now is saying that everything is just so unaffordable that the younger people, just based on their incomes, there's no way they can save up the money needed for the down payment and
So
the
it's a
closing
cash-
costs.
it's
It's
the
a
cash
cash
hurdle.
thing. It
Yeah,
isn't
which
so
is-
much the mortgage payment.
Yeah.
Although the mortgage payment is a factor because the
Sure.
prices are high.
But if you can get qualified for a payment to find a house in that number, the cash is still the biggest barrier because you literally need it's thousands and thousands of just like when you say how much cash is required, it's your down payment plus your closing costs and prepaids. Okay. So Jim, we talked about like that 250 price point, which is I would say on the low end in Palm Beach County, like
It is
something
on
like
the
that.
low end, yes.
You get $15,000 required, something along those lines. So then if you didn't have down payment assistance, if you didn't have seller credits, if you didn't have family to help you out, how long would it take you to accumulate $15,000? And maybe you could spend your entire 20s with diligent savings and only have $15,000 in your nest egg by the end of that decade, right? Just the way
Yes,
that
that's
living
true.
your life and everything. So I get it. Now, luckily, we have things like down payment assistance programs that are geared towards first-time home buyers.
Seller concessions.
There's seller credits. Like, let's that same scenario where you got let's say you got 15,000 DPA, that took care of most of it.
Down
What if
payment
you
assistance.
could only get 10,000? Well, you kick in would you say a 3%
The
seller credit?
right. And
That's about $6,000, $7,000, something like that make up the gap. So all those are out there. I mean, that's what people are doing to be able to overcome that cash hump. But yeah, I get it. It's hard to accumulate that amount of money, especially if you're paying rent, got car payments or lease payments, whatever it is. Like, it's just hard to save.
Yes, it's really tough, and that's the thing. And I don't see how that's going to be solved. Every time I think about how can we make it where it'll be better for way more buyers to buy, because there is such a pent-up demand. That's what this article is showing. There's such a pent-up demand for purchasing homes. And it isn't just first-time home buyers. There's pent-up demand for people who's like, I really don't want to stay in my home right now. I'd like to move someplace else, but cash restricted, income restricted, something. And so I don't see how this is going to be solved unless we go through, and I hate to say this, another massive correction where we lose 10 to 15% of the value of the homes.
Well, I mean, I guess there's,
and I don't want that to happen. I'm not advocating that for it to happen, but how else are we going to make homes affordable if we don't have massive price drops?
well, there's your good segue into these ideas that are percolating about how to solve this crisis.
Well, I asked ChatGPT what was their definition of a first-time home buyer.
Oh, that's good. Yeah.
And then it gave me the link to an NAR article that says that they count somebody that, like Mike said,
anybody that hasn't lived in a home for 3 years or hasn't ever bought a house that they homesteaded.
Exactly. That can include individuals who have owned a home, just not in the past several years, or previously bought a home with a spouse, but are now making a purchase on their own.
Which is a good answer, but I think probably out of context to the study that they did, right? So it's giving you a good answer what's technically a first-time home buyer, but it maybe not.
But that's what they're using. That's what NAR is referencing as a first-time home buyer, which is what you use for a first-time home buyer.
Yeah, and so I mean, if that's the case, then I could see it. Yeah, of course. Then when's the last time you bought? What age did you buy your last home? They might as well be asking,
right?
Like, or something along those lines.
That's true.
So
let's go ahead and take the break, and then on the flip side, we're going to go right into. We don't need to do that till the end now.
Okay.
We're going to go right into 50-year mortgages and mortgage portability and see if that is an answer to what we were just talking about.
Excellent. Lots to get into. There's still an hour remaining on this Saturday. Thank you very much for being with us. Of course, if you are interested in being involved in the conversation that we're having, if you have a question, a comment, concern, you're always welcome to be a part of the show. It's a 4-minute break. You're welcome to dial in now at 877-927-6969. And if you are not comfortable on the radio and you need professionals, you're looking to buy a home, sell a home, you're stuck with a home, you don't know what to do. If you have something that touches the world of real estate and you need a professional, remember FloridaTalkRealEstate.com. Find us on Facebook and YouTube. It's Florida Talk Real Estate on both. Consume away, share as well, because you can change lives, including your very own with the pros. FloridaTalkRealEstate.com. There's a hotline there. If you like to be old school, pick up the phone, dial 888-973-7828. That's answered 24 hours a day, 7 days a week by a live body. You'll find it at FloridaTalkRealEstate.com. Again, FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here on Real Radio.
When the smart speaker you gave your parents eventually becomes yours, tell your smart device to play Real Radio 92.1 on iHeartRadio. Real Radio weather.
I'm CBS 12 meteorologist Charlotte Carl. Expect a pleasant remainder of your Saturday. Temperatures will get into the 70s and low 80s with a mostly cloudless sky under high pressure. We are going to see an onshore breeze persist, leading to a moderate risk for rip currents at all of our area beaches.
This report is sponsored by Straight Talk Wireless. Don't let data limits hold you back from being the gift master in the family group chat. Switch to Straight Talk Wireless and get real unlimited data on Verizon's 5G network. Straight Talk, available at straighttalk.com or Walmart.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, there it is, 877-927-6969. That is the toll-free number. You're welcome to join us. About an hour remaining on this Saturday. Johnny C is me. Jimothy's our producer extraordinaire. He'll dial you up there. At least I believe he will. How are you, my dude?
Hello, and good morning. Yeah, give me I'm not doing anything over here.
No, you haven't been just...
give us a call.
I've been just working on all the equipment since, I don't know, 10 till 9 this morning.
Keep me busy.
Thank you for all your efforts.
Thank you.
Always.
Thank you. Good job, Johnny.
We appreciate it. Good job. Thanks, man. Thanks for boosting my ego. I don't know what the hell I've been doing. You're amazing, Jimothy. Thank you very much. Johnny C, that's me. Mike Rauch, he's the mortgage guy from the mortgage firm. Talk about amazing. What's up, my dude?
Let's talk about amazing.
Yeah, you're pretty fantastic.
Oh, wow.
Yeah.
Thank you.
Yeah.
I don't hear that very often.
I tout this team to anybody. Anytime I'm involved or overhear a conversation about real estate, I'm like, I got you team.
Amazing.
Yeah.
Amazing at what they do. Actually, I do hear that a lot.
You should.
Well, you say it every Saturday.
True. Yeah. And it's the ringtone. You're amazing.
And my mom.
Right.
My mom said I'm funny.
Yeah.
Moms are the best.
Funny looking.
There's Ross Komarinetz with Brightway Insurance, Juno Beach. Taking shots over there.
Happy Saturday.
You know, that's hot, Ross.
No, it's not.
No. You got your own mic now, Ross.
Thank you. Thank you. I actually don't like sharing mics. I think it's unsanitary.
I do too. Yeah, I'm with you. Thanks for sucking it up with you. We didn't even have a mic condom on.
No.
Especially
No.
considering Johnny's condition.
Yeah, seriously.
Right?
Yeah. I heard that's how you get the clap.
We see how close we were.
Yeah.
I mean, it's been a while.
What is the clap, by the way? I mean, I know the category that it's in, but
I'm
is
pretty
there
sure it's
is there an
chlamydia.
official? Is that what
I'm
it is?
pretty sure it's
Chlamydia is the
chlamydia.
clap. Okay,
I think
that
it's
would make
chlamydia.
sense.
I would call it
Yeah.
the clam.
Oh,
Yeah, I know exactly. Not the clown. I don't know why they
Something
call
else
it
already claimed that name.
that's
Yeah.
right.
I was
That's
gonna
right.
say,
Yeah.
you're really tainting things. With that. Let's not do that.
Home run.
Jimmy T's our fearless leader. 13 plus years now. Told you he runs the top producing Keller Williams team. It's the Florida Home Pros team with Keller Williams Innovations. Hi, Jim DePaola.
Hey. Just want to do another shout out.
We asked Glock or ChatGPT if it's chlamydia because I have to know.
Yeah.
It makes sense.
Oh,
the
might be
the
gonorrhea.
CL.
Could be.
Oh,
gonorrhea.
it could be. Yep, it could be.
Could be. But
That's-
my instinct is chlamydia.
So,
the drip.
I think. See,
Right.
I'm with you. That's where I'm at.
Yeah,
100%.
yeah,
Clap is chlamydia. Drip is gonorrhea.
Yeah.
Yep.
Yeah, we're gonna
Jim?
find out in a second.
Jim?
So
Gonorrhea.
it is the clap is gonorrhea.
Yep.
So we have it
Ah.
backwards.
Slang for gonorrhea.
And the
Ah.
chlamydia is the drip, or is it all the drip? And by the way, drip's like supposed to be cool now. Everyone
Right,
else
yeah.
will be,
Yeah,
oh,
you
look
got the
at
drip.
his drip.
Oh,
Be like,
yeah.
what do you mean? That's nasty.
That's because of the jewelry.
I think
Like
so.
the bling.
They're,
the drip.
no,
The
I
ice.
think not only. I think it's just the fit in general.
Oh, the fit.
I think
Same.
Dripping.
Same gonorrhea.
it's all the same.
Mhm.
All right, so
Ah.
we're just morphing it. None of it's good. I think you can just kind of lump it all together, right?
Yep.
It's not that bad. I mean, it
Yep.
goes away.
Yeah, right. And there's there's got to
Oh,
be some
God.
benefit to it, right?
You want me to read this?
No.
I don't think so.
No, I don't think so either.
Now I want to do some shout outs. Shout out to Tom. Tom is one of my favorite customers of all time. Tom is the guy whose cat made him $100,000 back in the day. Remember Tom?
Yeah. Tom's awesome.
Yeah, Tom is awesome. So that story was Tom came to me and he said, I really want to sell my house. I've been listening to your show. I sat down, I figured everything out. He had an older roof. I budgeted that in and said, this is what you're going to sell a house for. He goes, sounds great, Jim. Going to hire you. But there's one thing. I got to wait for my cat to die.
Right.
And the caddy, I go, well, what's up with that? He goes, I don't want to take the cat with me. I don't want to move it because it's older and I don't want it to go through that trauma. And it's
gonna
my
wait.
kid's cat
Mhm.
and I'm going to wait for it to die. Oh, I just went out again. Can you guys hear
Yeah,
me?
yeah, you're
Oh, I
good.
can't hear anything.
That's okay. Keep
So,
talking.
I can hear now.
Oh.
So what happened was
Did nothing. Go ahead.
it took like 18 months or something for the cat to pass. And by the time that happened, the prices were going up like crazy.
Yeah.
So he ended up making $100,000 more than he was
Yeah,
planning.
The cat lived a lot longer than he
It lived a
anticipated.
lot longer.
Yep. And ended up really benefiting financially because of it.
I was like, that is one awesome cat.
Well, that shows you how much the cat appreciated not being uprooted. The cat was like, you know what? Thank you.
Yeah.
And this is for
Yeah,
you.
here you are. You got a gift, right?
Thanks for cleaning my litter box.
So
all the
now
time.
what's happened is Tom moved to a rental property. This is a few years ago, and now he's retired, and now he's decided that he wants to move out west to be closer to a bunch of relatives out there.
So he's a first-time home buyer.
Yeah.
So yeah,
Technically.
because it's been a couple of years.
Going to skew that age median.
So we got him to the Polston Group out in Tucson, Arizona. They helped Tom, one of Tom's customers. Tom is a big fan of Sean Tom W. And he asked us to help a relative sell a house out there in Tucson. Well, Tom is moving. This Tom, different Tom, is moving to Tucson too. So he's like, okay, great. Got him over to the Polstons. They're closing on the 19th. So Tom is moving to Tucson. I'm going to miss him, but I'm also very happy.
Yeah.
Another exciting referral deal that I've done. I'm starting to do them now all over the country. So you don't have to just need a realtor here in Florida. I can get your realtor everywhere in the United States and in 44 other countries.
Yeah, and you're doing the part that everybody should be doing anyway. You're
The
really
vetting.
You're vetting these people. You're not just here's somebody I found. You're vetting them. What's your production? How well do you know these areas? Like what show me your back of your baseball card here, your realtor card. Show me your stats.
Exactly. So what happened this week is Jennifer, who's been a big fan of the show, and we helped her sell a house about 4 or 5 years ago. Jennifer and Jason, they called up. They've referred out a few people to us over the years, which I really appreciate. And then they called. Jennifer texted me earlier last week, and she said, "Hey, I got a cousin or a niece up in Brooklyn who wants to buy in Jersey. She had a really bad experience with a realtor. Do you know anybody up there that could help her?" I'm like, "Absolutely." So I talked to Rachel and Robert. That's Jennifer's relatives. They're moving from Brooklyn to New Jersey. They have a very tight budget for where they want to live. They understand that. They also know that where they want to live based on the commute, because the husband still has to commute to New York every day, that they got to be close to the commuting, like the subways or the trains or whatever you use up there. But
so they still got to work. Are they part of the New York City exodus?
No, I don't think it's more about that. It's more about their child needs special schooling and stuff, and they need to
Get
be
into a different school
and they
district.
really want to buy. So they're moving out to this area, but they needed, apparently in the area they're moving to, because they're on a lower budget, safety is a big issue. So like, Jim, I have to have a place with a good school system. I got to have a safe neighborhood, because street by street over there could be pretty crazy.
Sure.
I have to have it affordable, and I need a realtor that's got my back, because let me tell you what happened with the first realtor. The first realtor, they found a property that was owned by an agent who was flipping the property. So the agent that was selling the property was also the owner who was flipping the property for profit. Now my customers Rachel and Robert wanted to do a mold inspection, and her realtor was like, "Don't worry about it. What do you need a mold inspection for?" Well, they went ahead and did it anyway and found out there was mold. And then her agent, instead of negotiating on her behalf, was saying, "Don't worry about it. Just go ahead and buy the property anyway." How crazy is that? So they fired that agent. They lost the money for the inspection and the appraisal, and the whole thing fell apart. So we got them to a great agent up there. She's been up there 20 years, and she does like triple the production I do. And when I started talking to her, she's at a higher price point normally. But when I told her the issues that my buyers needed and everything, she seemed like the perfect match. And is it working now?
What's that?
Oh, wow, it's working.
Oh, look at that.
Oh, look at Jimmy. You're a master, man.
Yeah.
Oh my God. Yeah, yes.
He had to rewire the whole thing, but if you've been with us out the gates and noticed all the issues,
good. No, I'm glad.
It's a payoff for everyone that's been invested in this. You know what I mean?
It only took an hour and 15 minutes.
All the mics are working again in the studio.
That's so funny. So
with the patch cable.
Jim, your camera.
Yeah, he reran a new cable. Exactly right. Yeah.
So thank you, Ross. So thank you, Jennifer, for getting us to Rachel and Robert. Can't wait to have that great success story up there. Rachel's like, "You're in Florida, and you're helping me up here." I go, "Yeah, I promise I'm going to help you up there. I'm going to get you to the right people."
Yeah,
So,
and hopefully,
really
if she knows anybody coming to Florida, she'll remember
Yes.
Jiminy.
Yes, exactly.
And do some vetting as well, and be like, now I feel great about referring.
Exactly. So let's talk about this 50-year mortgage. We were talking about affordability before the break, and I don't even know who floated it out, but somebody floated out.
The president did.
Was it the president saying a 50-year mortgage?
I think in the name of affordability.
And it was more of a floating it out there than a real.
In the name of affordability. Like,
Yeah.
how can we make things more affordable if the housing market's going to stay propped up the way it is? How is it more affordable?
It had
We
enough.
just pay forever.
The float had enough impact where I had a real estate agent call me this week and ask me if it was available. So that's how strong of the idea was floated out there.
So
had some people thinking it was something happening
So let's
as opposed
talk
to just
about
an idea.
Let's talk about the stats of how this would work. Okay, so the Detroit News came out, and what they did is they took the average, the median home sale price in the United States, which is $415,000 right now, very close to Port St. Lucie. Port St. Lucie is a reflection of the average home sale in the United States right now.
Gosh, every home I get sent from Port St. Lucie, and I get a ton of them, way above 415.
Well, the other thing that's interesting, we'll get that in another show, but the other thing, I'm going to start talking about how people in Port St. Lucie now are moving to Indian River County for affordability.
They're further north.
They're going more and more. And next is Sebastian. That's coming. That's coming.
Yeah.
You know,
Watch out, Palm Bay, coming for you.
Yep,
I called it.
And Rockledge.
Of course.
It's all just going to
You're right.
step on top of it. But so this affordability with the 50-year mortgage. So if you had a $415,000 mortgage with 10% down, Mike, and a mortgage rate of 6.17, okay, the 30-year mortgage would be $2,288 a month. What do you think the 50-year mortgage would be?
Are we using the same interest rate?
Yes,
or are we
same
gonna,
exact thing. So 50 years at 6.17 for a 415 house.
So what is it? 2000 what?
2288. So
2288. So
yep.
give me 1300.
Okay.
Wow.
What do you?
2000.
I'm not asking Mike.
2000.
2000.
1800 a month.
Ross, ding, ding,
Yeah,
ding.
It's got to be Ross.
$2,022. All you're saving is 260 bucks.
That's assuming the same interest rate.
Yeah,
and
that's
they're
assuming
gonna
you're
the
getting
interest
the
rate's
same-
going to be higher on.
I
the-
would assume that with the 50% interest rate, it'll be higher.
So hold on a second, real
Right.
quick. So at a 30-year, where we're at right now, in my head I had it around $3,000,
And it was 2288.
and it only goes to 2288 by extending the terms almost double. What?
And you only save $200 a month.
Only goes to 2000.
2000.
Goes
So
from
you're-
22 to 2000.
2000.
Yep.
That's assuming the same interest rate too.
So you're paying that $200 over 50 years more.
So am I accurate, Mike? Is it around 3,000 if we're just kind of playing that average game? Are we around 3,000?
I don't think they're taking taxes insurance, Johnny.
Okay.
I think they're just doing principal and interest
right.
in this article.
Got you. And in the other states is going to be a little bit of an advantage because they're not quite paying the taxes and insurance that we are.
And
right?
some are paying more.
And some are paying more. Of course, that number is going to slide all around.
So,
but am I accurate, Mike? Is that ballparky for our area? $3,000
For what?
That
For the total payment?
Yeah, medium. If we're at 415,000 at the interest rate we're at right now,
No.
no. Where were we at?
No,
Rob?
I would say it's probably roughly right now when you get your full like principal, interest, tax insurance, maybe mortgage insurance.
Yep.
So for every 100,000, you're about 1,000 on your housing obligation. So a $300,000 home is going to land you somewhere around $3,000 a month.
A 300,000. So a
And-
415, we're looking at about $4,000.
Or yeah.
All right.
Yeah.
So at 40 for 30 years,
Mhm.
at 40, it goes to 220.
You mean a 50?
No, but your number was at 40 years, it went to 220
No,
or
50-year
2,200.
mortgage.
50 years.
50-year mortgage.
Right. But at 40 years, it went to 2,200. Am I wrong?
No,
The 30 was 22, 50 was 2000 even. Or right around.
So you're saving about $250 a month, but you're paying it for an extra 20 years. So what they're saying is, now check this out. Here's a couple other stats to consider. If you take those two different things at 6.17 and you do one at 50 years and one at 30 years, you're paying $389,000 more in interest over that 50-year loan compared to the 30-year loan.
To save-
$389,000. That's like double the price of the house.
To save 2,400 a year
To save $2,400 a
on
year.
monthly obligation,
You're paying
gonna pay
$389,000.
more
$389,000.
for 50 years.
I like to think a bit.
But have one more statistic and then go ahead, Mike.
I was just going to say, in the context of solving the affordability crisis, how does that shake out in practical
well, that's what I'm
terms?
saying. It doesn't.
No, but let me put it this way. So, how much more purchasing power would it give you?
Oh,
right?
let me say $35 divided by 200. What does that come out to?
Oh, geez, I don't know. Let me do it. So if you're doing I'm just going to do a $400,000 loan. Okay, it's not purchase price, just loan amount, $400,000 at 6%. The 30-year payment is, call it $2,400.
Mm-hmm.
The 50-year payment is $2,100.
And that's no taxes. No, we're just
Just
talking
principal and interest.
Principal and interest.
Right?
Okay.
So let's take that 2,400 number, right? So that means you can afford a $400,000 loan.
Right.
Well, if I did a 50-year mortgage, you're like, okay, well now I can get more loan, right? Because it's going to reduce my payments. So how much more loan can I get? So what kind of home could I afford now on the 50-year? Assuming my max was 2,400.
Oh, I see.
So you would do a $450,000 loan amount to get that same 2,400 payment on the 50-year. So it essentially allows you to buy a home that's $50,000 more on the 50-year mortgage than it does on the 30-year mortgage.
Without really changing your nut for your
the
principal
only
and
thing,
interest.
yeah, exactly. It's just based on what's your max qualifying payment.
But your insurance is probably going to be higher on a home worth more, I would imagine,
And
right?
well, depending on the size, right? So
probably going to be bigger, right?
And then
Taxes
your taxes,
will be
are
taxes
higher.
are gonna be
potentially a little bigger. Yeah. So it's not a lot of bang for the buck.
No, it isn't. Now, here's another thing to consider if you care about equity in your home, not including appreciation. This is just paying down the mortgage. If you were paying down the mortgage on a 30-year loan, okay, it's 6.17 on a $415,000 house, it would take about 12 to 13 years to get $100,000 of equity. Okay, on a 50-year loan, it would take 30 years to get $100,000 of equity. So it's double.
Just making your regular payment.
Right.
Yeah. So to me, 50-year mortgages are more like renting, like you're kind of leasing the property because you're probably not going to pay off the mortgage. Think about it. You'd have to be like 20, assuming that you were going to make the payments and not pay early, right? At 20, if you kept that house and you bought it at 20, you'd be 70 when you paid it off, right? That isn't real life. That isn't how life works.
I mean,
right?
is anybody
People aren't
paying off
gonna
their
do that.
house?
We know a lot of people have paid off the house. Yeah, as a realtor, I meet a lot of people who have zero mortgages on their
Right,
home.
but like if you buy your home at 22, you don't see like a lot of. I feel like the people that have paid off their house are
Older.
Yeah.
and it's a smaller demographic than the people who
And a
move
lot of
in 5 years.
people, maybe they paid off their house or maybe they bought the house with proceeds from a prior sale where they didn't pay off that prior house, but they
Right.
made enough, over the years that they were able to buy their new
How
home
many
without
people
a
are
mortgage.
actually finishing their 30-year term?
So
Yeah,
and
it's a good question.
and the other thing is when you give a benefit like this is how people are going to use it. And I'm not saying it's wrong, but they're going to go Mike's way and they're going to go, wow, let's try to make the homes affordable. It's like, well, now I can pay $50,000 more for the house, which is going to raise property values again, right? So that's what I don't get is how are you going to benefit the buyers without having the sellers benefit too by raising appreciation?
Yeah, I'll say.
Do you understand what I'm saying? Like we're in a catch 22.
The idea of people spending more for homes, but then somehow becoming more affordable, don't connect.
Right. It
doesn't
isn't connecting.
It gives you more buying power. That's the way I think about it.
Yeah, it gives you the ability to pay for a home that you can't afford, right?
On the 30 year.
On the 30 year, right.
According to who, Johnny? Like, I'm sure these same arguments were discussed when they were talking about the 30-year mortgage versus what was in
15.
place before that. Right. And if you go back, let's say that you never did mortgages. They didn't exist. You basically had to save up money and buy a house. Like, where would housing prices be if that were the case? Right. So there's always this, like, of course, home values are going to go up because now you can afford it. Right.
Well, I love the idea of making it more affordable for people. I don't think anybody's going to fight that. But all of these connections drive home values up.
Right.
Because
So
people are going to spend more for the home. It just, the caboose follows
100%
directly.
If you think about like just car loans, even if you've never been a homeowner, car loan is probably something you have looked at. And when you go to buy a car and you're looking at loan options, there's the 3-year, the 4-year, the 5-year, the 6-year, the 7-year payment. And if monthly payment is the most important factor, so your budget essentially, I mean, you're going to look at those longer term car loans and you're not really concerned about how much you're paying in interest over the 3 extra years of it, right? Because you just want your payment. You need to get it. You want to get the car you want at a payment that's affordable.
Yep.
So,
but the thing is what that's 100% correct. But then when everybody starts doing that, the prices go up, 100%. And then you lose the whole.
Then you're buying the car you can't really afford. Like all of a sudden I'm gonna get that $60,000 truck that I've had my eye on instead of the $30,000, 2-door gas.
And then repossessions are at 14-year highs.
Yeah. So I
Wall
would
Street
say
Journal says it's good to be a repo man.
As a professional in the real estate industry, mortgages, you could very easily advocate for the 50-year mortgage because it's going to allow people to do more loans, right? So as a mortgage professional, I'm like, oh, great. Yeah, 50-year, let's do it. It's another tool, another loan. You go on there. As a homeowner, it's guaranteed housing prices will go up if you introduce the 50-year mortgage, right? Because people are just going to be able to buy more house, right? And still have the same payment or something. So as a homeowner, I'm like, yeah, great for property values.
Mm-hmm.
As a buyer looking for affordability, ain't gonna cut it. It's not a solution to the affordability issue.
You-
If anything, it exacerbates.
You'd be
the-
doing
well,
so much better just taking advantage of this market with the lower interest rates, have the seller buy down more interest rates because they're motivated. This is a much better market than if we had a 50-year mortgage market for buyers. I'm talking about. This
Yes.
is a better buyer's market.
I mean, I'll tell you what, if you could lock in a 50-year loan where you're paying 5%, there's a lot of people that would do that. And
5%?
Sure. I'm just saying.
I think most people would dive at that.
Yeah, I'm just saying, like, if that was on the table, 5%, because then you're like, oh yeah, well, 50 years, I'm going to take the money I'm saving, I'm going to do something else with it. Investments. Am I going to do better than 5% over a 50-year span on my investments? People are going to start thinking about it that way. And they're going to say, yeah, I'll take the lowest payment possible. If I really want to pay off my mortgage in 10 years, I know how to do it. I'll just make extra payments.
And don't you think
right?
there's an instant shift? Because I don't think a lot of people buy homes unless they're a certain age where the thought is that I'm going to be leaving this to my kids. I think this is my next stepping stone to my next home, to my next home, to my then forever home. I think in a 50-year, you may be like, hell, this is the house that I'm leaving to my kid. I think it almost shifts the thinking of the property.
There has been,
I see what you're saying,
and Jim, you brought up the argument about like the equity position. So on the 50-year loan, you're paying, if you're just relying on paying down your mortgage to kind of like impact your equity position, which was, I think, the mindset for a long time with mortgages, which is, I'm paying down. Look, I got all this equity. I'm paying down, building my equity. That shifted at some point because the increasing housing values is really where your equity position lies, right? That's where you're going to get the biggest movement. You're not paying down your mortgage. You're just, the home values are going up. And so, 5% year over year, 10%, 20% year over year. We saw those kind of numbers. And so that is probably still a mindset for a lot of people, which is just, hey, I'm not worried about my principal balance on my loan. My home value is going to be higher than it is now at some point in the future.
I think that's pretty well a lock. I mean, unless something catastrophic happens, but 3 to 5% is an expectation for everybody year over year, wouldn't it be? I mean,
well, part of the major catastrophe, obviously, in 06 to 08 was home values went way down. It didn't matter if you had paid your equity position down on your mortgage, right? Your home value, the market dictated your equity position, right? Not what you paid on your mortgage. So,
well, I guess it always does, right?
Well, Ross,
I like the 100-year mortgage.
Ross, that's called renting. Ross, we have 100-year mortgages. It's called renting. You
no, but I can. I was looking. Somebody brought up Japan, and I'm like, do they really do that? So they did try the 100-year mortgage in Japan at some point, with the feature that the mortgage could be inherited by your estate. Right. So you keep the home and the mortgage on it, which actually happens with us too, right? That goes, if you inherit a home and it's got a mortgage on it, you're going to have to take care of that as well.
I saw something about mortgage portability.
Well,
That's
I'm
another one.
I'm going to be talking a little bit about that. But Ross, you did a little chat GPT thing about the 50-year mortgage, and what was it saying about it?
Well, I had seen like a article or somebody wrote about like, 50-year mortgage, it's great because you're basically shorting the US dollar, or it's a leveraged short on the US government. I was like, what the heck does that mean?
Yeah, well, it's a 30-year fixed rate, so you can
you borrow today's dollar to buy a real asset, then you pay the debt over decades with future dollars. If the dollar's purchasing power declines faster than your interest rate, high inflation, currency devaluation, loss of confidence in the dollar, the real value of your debt erodes. You still owe the same amount, but those dollars are worth less. So you're effectively short the dollar and long the real asset.
When I hear that stuff, this is what I hear. Blah, 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 blah for most people. And this is why. It's just like the people that say it's better to rent than buy.
Yes.
Those people are assuming that you're going to take the savings that you get and start investing into things that get a bigger return than the appreciation on your house. You have to do that in order to make that plan work. And how many people are sophisticated enough to go out there and say, hey, I'm going to start taking all the savings I have and start investing in different stocks. Now, there is one person that I know right now that would be perfect for that DJ guy we were just talking about who's going to close on Monday.
Mm-hmm.
That's what his whole thing is about, is trying to do that. But it's work and it's time and it's effort. And I don't think the average person does that. And they're buying a house to live in. It's something that they're using to live in, to raise a family and, go to good schools and be close to your job. There's so many more things than
and
just the financial component of a house.
I definitely am way more to the idiot side of the spectrum. I mean, I understand this, but
more than the savant side.
Yeah, for sure.
Yeah.
If your mortgage payment is $2,000, it's $2,000 regardless if the dollar's the driving currency or the bottom end currency. It's still $2,000. So that perspective of what the dollar's worth and paying less, you're still paying dollar for dollar regardless of what the US dollar's standing is as far as value of currency.
Yeah, it kind of requires you to step outside of the dollar.
It's not like we're trading currency here.
Yeah, exactly. You move away from the dollar and then you can watch your dollar independently. No, you're operating in the
dollars.
Yeah.
Right.
I mean, I guess the only way it makes sense is like if 10 years from now, milk is $1,000 a gallon.
Yeah.
But your mortgage payment's only $2,000. You're like, it's only two gallons of milk.
Yeah,
I killed it.
That's the best way to frame it. And if you can picture a society like that, jump on the 50.
Yeah. Now portability, I'm very unfamiliar with it. I hadn't heard about this before, and apparently it's used in Canada and Britain, right? UK and Canada already have portability mortgages, and supposedly they don't have the 30-year locked-in interest rates. Your interest rate is only locked in for 2 to 3 years.
So it's all adjustable after
It's
every 3
adjustable
years?
after that. So I'm assuming what they're deciding is with the portability up there, in those countries, is that you decide when you're selling your house, do I want to keep this interest rate I've already got, or am I going to trade down, if you will, if the interest rates are lower?
Yeah.
Well, if it were fixed, it would be easy. If it's an adjustable, then it's like,
well, and
take it with you because it's going to be the same, right?
I don't know why you would favor one over the other.
Are you running credit every 3 years? Like if you destroy your credit in the meantime, are you then getting
the advantage has to be like I've got a clean payment history on this mortgage. This mortgage is sufficient for me to get into this new home. Why would I need to go through the process of getting a new mortgage? I'm just going to bring this one with me and we'll secure it to the new home, right? We unattach it to the home I sold, resecure it to the new one. I don't have to go through the rigmarole of underwriting and, all of that stuff. And maybe my credit has gone bad, but I still pay my mortgage, right? I still got a good payment history on my mortgage. I'm not going to have a problem with that. So maybe that's got to be the advantage. If it were fixed rate, then I could really see an advantage. Like I'd say you got your 3%, and today's market is at 6%. Well, of course, I'm taking my 3% with me.
Well, is this a whole new loan every time too? Is there closing costs involved? Is this just like money making scam by the banking industry?
Let me read this paragraph because I'm unfamiliar with the two.
Can you imagine having to have closing costs every 3 years?
Right. I don't think that happens.
No. You mean like as it's adjusting?
Yeah, whole new loan.
No. There's such an adjustable rate. I think Jim's saying it's an adjustable rate mortgage.
Well, let me read you how this says. Canadian and UK borrowers typically have fixed rate loans with terms only lasting 2 to 5 years.
Oh.
That's vastly different from the 15 and 30-year terms in the US. At the end of these short-term loans, homeowners in Canada and the UK can either pay off their mortgages in full or renew them and negotiate new terms.
Renew. Interesting. So you're on the right track, Johnny. What's the cost of renewing?
Do we have any Canadian listeners that can call in with their mortgage, their lending experience?
Exactly.
Come on, those
are there any Canadians left in Florida that will call us?
Give us a call, eh?
Yeah, give us a call.
Oh, now they're really going to call.
Oh, come on.
So
just because the Cup's been in the U.S. for so long doesn't mean you got to hate on us. That's right. Hockey's basically an American sport now. Have some.
So with Canadian players,
but see where the team is, right?
So I don't know if portability will work or not. My big question is, if they go to this, are they going to do the 2 to 5 years? And maybe you have a choice. Maybe you could do a 15-year fixed, 30-year fixed, or you could do this portability thing. And maybe it's just another loan product out there to be used. I don't know.
I think the portability, in my view, is a different question than that style of loan, where it's like a 3-year agreed upon structure, right? For interest rate and term. And I'm sure they're still on like a 30-year amortization, right? You're not structured to pay off whatever you borrowed in 3 years. Right. You're agreeing to a payment structure over the 3 years, and it's probably a 30-year amortization, right? So similar to our 30-year loan, the way they calculate the payment. So then it's just like, okay, well, in 3 or 5 years, you then have the option to switch structures. Maybe you can switch into something that's not adjustable, or switch into a different, I don't know, baseline index for your rate.
Mm-hmm.
But then the portability would be, I think, a different conversation, which is just like, bring the loan, attach it to a new house, which I don't mind that idea in general. If it were a fixed rate loan, it would be easy analysis.
So didn't we 100% blame adjustable rate mortgages on our last collapse? Like, wasn't that
that was
toxic
part
loans?
of it?
Wasn't that like
it was part of it?
Well, they had the negative amortization loans, which were pretty amazing.
Yeah.
Which
Canada's not going that route? Is that
I mean, think of it like negative amortization, almost like a interest only or a reverse mortgage, right? Where basically instead of paying down your loan balance, it's paying up your loan balance.
I was in one of those. I have to admit,
choose your payment.
Right when I got into real estate after my last career, I used one of those loans where it was called Pick a Pay. Remember that? Pick a Pay. Every month you could choose how you wanted to do your payment. You could pay more than what you're supposed to pay, right? Than your set fee. You could pay the set fee. You could also pay less than what you're supposed to pay, and then that's the negative equity part. And you could choose. It's like, oh, you have so much flexibility and everything.
These were all very creative solutions to the affordability issue, right? Which is, how can somebody buy a house in today's market, but still be able to afford it from a monthly payment perspective? And so you did these things such as very low introductory rates, teaser rates, right? So your payment for the first X amount of time was only this. Maybe it was an interest only payment. Maybe it was a super low interest rate, and you qualified off of the super low interest rate, not what it's going to be in 3 years, but what it is on the intro rate. We talked about the cash problem. How do you come up with the cash? Well, we'll let you borrow it. Matter of fact, we'll let you borrow 105% of the value of the home, so you can cover all of your costs. So basically, zero out of pocket, super low introductory teaser rate, adjustable rate mortgage, and what else? Oh, you don't have to, you don't need any income docs. Like we think you're going to be fine. We think you're going to be good.
Stated income.
Yeah.
Right?
So stated income, stated assets, meaning I don't really care where your assets came from as long as you're whatever cash you need, which might be zero. Maybe you're going to get money back at closing, Johnny. Right? Like, so all of these things were
you're helping affordability.
This was the mortgage industry's solution to the affordability question.
It worked.
Right. And it definitely got a lot of people into homes
that they lost,
that were not affordable unless you put them into these, structures.
Right.
And then all of a sudden, when the structures changed, that was certainly one part of it. Now, which was it, chicken or egg, Jim, as far as like housing values? Like what? Well, because the housing value was the straw that broke the camel's back.
That's what I'm worried about when they talk about trying to fix this affordability crisis. They were having, even though it was a BS affordability crisis back in 03-05, okay, because the prices were going up so fast, they had to come up with products. I mean, it was crazy high. COVID, even the COVID time wasn't as high appreciation as 03-05.
Oh,
right. Close, but not cigar, right? So the thing is that when we started offering those products to make homes more affordable so you could buy more homes, what happened? The prices went up like crazy. I don't see how we're going to solve the affordability crisis for buyers
by getting creative.
We created for the buyers without the sellers benefiting. And I'm not saying that the sellers shouldn't benefit, but that doesn't solve the problem, is the problem that we got. I don't know how they're going to solve it. I have no idea.
You need more income.
That'll help it.
There we go.
Well, people are talking about, I think one of the secretaries for the president, I don't know which one, he just mentioned that it would be a lot easier if everybody just made more money.
Yeah.
Right. But then if you do that, then that's going to increase affordability too.
Yeah.
Right. That's going to, I just don't see how we're getting out of this in an easy way. I think there's pain. There's going to be some kind of pain happening somewhere.
The idea of, well, it's okay that everything's so expensive if we just make more money it's
great.
Well, it fixes a lot, but it just doesn't fix anything.
It doesn't really. It kicks the can down the road for a while.
But we're great at that.
But that's just going to raise inflation.
Yeah, well, yeah, absolutely. Yeah, no, it's
I don't know.
Everything's more expensive, and now you can't afford it again, even though you're making more money.
That's right.
It's
And
just
you need to make more money.
and this has been happening over and over and over again.
Mm-hmm.
What's the good news for buyers and sellers in this market, though. Is
Well,
there any good news?
Yeah,
for 'em?
well, let's talk about. Yeah, thank you, Mike. I don't want to be out doing. Mike's ready. Mike's ready to get the noose out.
No, it's also it's very easy to get into that world of predicting, like what should I be doing?
Right
when
now?
should I do? A lot of people aren't in the sit back and wait mode, right? Like for whatever reason, they just maybe this is the year they got to do something. So we should be thinking about like what's ideal for me to do, what's my crystal ball say, but like what are my possibilities right now? What's it look like? I got to do something in this next 6-month window or this next year.
My baby's about to be born.
Sure.
My kids I got 3
growing.
kids in 1 bedroom.
Family's shrinking.
So that's real life stuff. That isn't like egghead what we're talking about right now. So when we're talking about real life, let's talk interest rates first for the buyers and the sellers. We went up slightly, 0.02. That's 2 weeks in a row we went up. The lowest we got to, I think, was 6.17 since 6.17 since we had the Fed rate cut. It didn't really. Well, I guess we dropped. Like what?
I call this flat. I feel like we've been with
The
flattish.
Fed rate, we've been flat basically
all
since,
year. We've been flattish, but like since September, I would say mid-September to now, we're pretty much hovering.
That sounds pretty fair. September 16th, I'm looking at. Yeah, we're in the like 6 to 6.25 is where we are. That's where economists say we're going to be next year, and the year after that, and maybe even the year after that. They think low 6s is where the bar is going to be right now. They're not predicting that we're going to be in the low 5s. They're not predicting that. I'm not saying that they're right. I'm just saying what they're projecting, the economists. So interest rates are still very, very low. And if people are complaining about the interest rates, let me ask you this. Would you rather be in August when we had 6.58, a quarter point higher? Or would you like to go all the way back to May of this year? We were at 6.89, right, versus 6.24, right? Or would you like to go to November 2023 if you want to do that? 7.79. So that was the peak of the interest rates that we've had for the last couple of years.
Raise your hand if you want to go that
7.79, and we went all the way down to 6.25. So what is that? 1.5% interest rate drop. 1.5%. If anybody said, "Hey, if you can get a 1.5 interest rate drop, would you do that?" Yeah. But here they're looking at 6, low 6s. Go, nah, I'm waiting to get better. Have fun with that because I don't see it happening.
And it's a big question for like people who are considering refi. So let's say you were in that zone where your interest rate is higher than today's market rate, whether it's a 1.5 or 1 or a half. Like the question you're asking is, well, what's going to happen this next year? Like, is now the time to pull the trigger, or am I waiting for these rates to drop? And there's no way to answer that with any level
surety
of assurance. Yeah.
Yeah. And the
can I ask a quick question?
Yeah.
So it's 6.25. How much cash would I need from a seller if I'm a buyer, Mike? If I wanted my interest rate to be 5.75, how much cash would I need to buy down my interest rate a full 0.5%?
So it's about, I would say, and it's not like this, it's not linear, it's not exact, right? So, but just roughly, it's going to cost you 1 point to buy down your interest rate 0.25%. So 1 point is 1% of your loan amount. So if you're borrowing $400,000, 1 point would be $4,000. That $4,000 can be used to buy down your interest rate from 6.25 to 6, right? So 1 point per quarter. So in order to buy it down 0.5 point, you need, 0.5% on your interest rate, you need 2 points.
So that's 8 on this example you were saying.
Exactly.
Right.
Okay, so it's a fair amount of cash, but
the question is, should you do that? Like that's one of the simplest concepts to like determine should you do it or not, because there's a break even period. You basically, Johnny, give me $8,000 today, and I'm going to pay you back. I'm going to make the math easy. I'm going to pay you back $100 a month.
Okay.
For the life of this loan.
Okay.
Okay. So it's going to take you
80 months
to recover your $8,000. Right. So what's that? 6.5 years,
almost 7 years.
Yep.
Yeah. So as long as this loan lives past that break even point, you made the right decision. That's a pretty long break even. A lot can happen in one's life in 7 years.
That's true. But if you look at the national statistics,
okay, how long do
average
people stay in their
person
home?
staying is 11 to 13 years right now. It used to be 5 to 7, And then it got
What's the
7 to 9.
average though? Because if you refinance, you're in the same boat, right? So if you refinance in the next 7 years, you also never made your money back.
Right.
Right. That's true.
So
But that's a gamble.
it's
The
you,
rates will go
there's
down.
there's no guarantee you can refinance. So if you feel comfortable that you're in a loan that you're probably not going to pay off, or one way or the other, you're not going to pay it off within your break even period. So the question is like, what's a comfortable break even? For me, I like 3 years as kind of like where I'm saying 3 years is probably a comfortable break even. It's possible that you do something within that window of time, but it's also likely you don't. So the shorter the break even, the easier the decision.
Because I think for the people that are hung up on interest rate more than anything, that particular number seems to be their biggest hurdle. And maybe cash isn't an issue for them. And they're so fixated on using such a big chunk for cash down. I think discussions with professionals like Mike, understanding where your money's better utilized based on your plan and obviously plans, a plan that can't change isn't a great plan, but having all that information, like to me, if the interest rate's the real fixed number, that's the issue. We can move that.
And you can especially if you can get money from not your money, right? So if you can get it from the seller, you can get it from some program or something.
And that gets us back to the what's happening in today's market.
Yes.
There's ability to do that. We just gave you a real life example where my sellers were more than happy to offer the seller concessions or the seller discounts or credits to the buyer that the buyer needed to close, because that mortgage broker said to me, for the buyer, they really need the money to close. They're very good on W-2. They've got, they're perfect on paper, but they're cash poor to get this house. So that's what it was going to take to do the deal. And I feel like, and the agent was very sharp. She raised the price of the house a little bit, so it wasn't as big of hit to our sellers. So you can do that in today's market, buyers, right? If we get into that crazy, frothy, heated market again, you're not going to be going through that. And anybody that bought during that COVID time and you had 15 offers you were competing with and you had to buy a house at that point,
you're not getting the credit.
And you were going through all that. Not only were you getting a credit, you
don't even bother inspecting them.
You were stressed out. The whole process, you were stressed out. And there was a lot more buyer remorse because they felt pressured to do something. Right now, you're in control as the buyer. Now, just to flip this seller side, just real quick, Mike.
Yep.
The seller side, it's still an okay time to sell. You just got to price the house correctly compared to everything else that's happening in your neighborhood, block by block, street by street. That's why we were able to get the house sold for James and Kathy so fast, because we were very realistic about what it was really going to sell for and put it at that price and not float it out there and we'll see what happens.
It's also kind of like this isn't like we're not talking to the speculative seller. Like we're talking to people who are in a position in life where selling could make sense. And then so do the dollars make sense? And so it's very easy, Jim, for you to, and painless for the potential seller to call you and say, hey, Jim, like I'm thinking about selling. What do you think I can get? I need to calculate what I'm going to walk away with and make sure that that works for my next step. And that's like a super easy call to make. And you give you an address and you work up some stuff, right?
Mm-hmm.
And you don't charge people to do that. As a matter of fact, you need those opportunities. Like that's how you thrive. So to me, it's always like do the analysis, figure out what's comfortable. What are the goals you're trying to achieve? Can you make it work right now? If it doesn't work right now, the great news is you now really understand why or what it takes to make it work.
That's right.
And then you can kind of watch it happen. DJ's a good example, right? Like we talked to him a year ago and he was looking for the unicorn, right? And it just wasn't there a year ago. Well, guess what? It was there now. Why was it there? Because he was watching it. He kind of kept his finger on the pulse. And when those opportunities presented, Jim, I don't know if Jim called him or he called you or, you kept in touch
he called
the whole
me,
time or what?
He called me and he knew that he'd been searching because he knew that unit that we closed on was the first unit he told me about before I started even doing the searches for him. And I showed him a bunch of others. I think we looked at 6 or 7 units or something, but that was the unit for him. That's what he wanted. It was perfect for him and it worked out well.
And if you've been a buyer and you're kind of like been waiting for things to happen, those things are happening. If you're looking at like Jim, the one that you sold, the 250, 6 months ago, a year ago, 2 years ago was probably, higher than that, right? So and it's not like we haven't had this major crash. Like we're talking about affordability. What's it going to take? Well, you don't have to have a housing crash, but if you think about where have interest rates hovered for the past several years, has that kind of been a natural kind of balm on housing prices going up or down or staying sideways? Like, has that been contributed to the affordability question just because rates have remained a little bit higher, right? And maybe that's the way to do it, just kind of like a natural cycle of where things should be. You know what I mean? It's kind of, who knows all the factors, but to me, that's a very like much more, a comfortable and natural way to combat this affordability crisis is to maintain interest rates at a level that, keeps things more predictable, more flattish, less spikes.
Yeah.
And it just reminded me what you guys were talking about, a property that I had a customer that was on the market with, and I told them that they needed to fix the house up for what they wanted to get for the property. I go, well, based on the home sales, your house is not in the condition to get the number you want. I go, so either we could work it where you don't have to do anything, and we're just going to sell it as it is, and that's fine. It's not like a horrible house or anything, but it's not updated that buyers are going to come in and want to do stuff right away with this house. Unlike that other house we just talked about, you can move in and not do stuff right away and feel like you got a great
Did the house just need like cosmetics, like makeup, or did it actually have to hit the gym or something?
It was more like, yeah, right. Well, actually, it desperately needed a paint job. Thorough cleaning, but that everybody needs that when they're going to go sell the house. But it definitely needed a paint job, and there were a lot of honeydews, and some of the mechanicals were older in the house, and they weren't taking that consideration. When they came to me, they wanted a very high price for the house.
That AC's got to be replaced, roof's on its way out. Yeah,
and I tried to put it together. So they spent 6 weeks, based on my information, trying to fix up the house. And then I finally called the guy back. I kept calling him. And then they were like, yeah, we're going to go with another realtor. And I'm like, really? After everything I've done up to this point? And they go, yeah. I go, what are you going to put the house on the market for? And the realtor, whatever number that they said they wanted,
he went with it.
Yeah. And the house has already had a couple of price drops. And
you're watching it.
Yeah. So, you can hear what people are saying, or you can see the stacks of what's happening in your neighborhood and base it on facts.
Yeah, so but my neighbor told me that my house is worth.
Yeah. So, know your numbers. If you're a seller, it's still a good time to sell. If you know your numbers and you do it the right way, it's a good time to sell.
Yeah, absolutely. There's a lot of people out there looking to buy a home. That's the reality.
Let's do the clap thing right now. Do you
want to do it now?
Let's do it right now.
Yeah?
Yeah, I can do it in the video. Okay?
This time you got to watch.
Yeah, now everybody watch the camera. Hold on, let me get to the
let's
camera.
Give everybody a chance.
Yeah, let me get to the
YouTube,
camera.
Florida Talk Real Estate on Facebook.
You say we have to watch the camera?
You got to make sure your hands are on the camera, that we can see your hands.
Jimothy, can you do it with us, even though you're not on camera?
Okay, sure.
Support and everything. All right, is everybody ready?
I'm ready.
I'm giving everyone just a minute to get on Facebook and YouTube so they don't miss out. 1, 2. Jim,
did it.
You did you?
Yeah, I think so.
Is he looking at
close
you?
enough.
He's not looking at you.
He's not looking. After instructing.
Do it again. You have to watch. No, you need to watch. Johnny.
That's a delay.
This guy.
Okay,
right
ready?
Eyes over here.
Yeah.
1, 2.
Okay, we did it.
Nailed it.
We're learning it. This is going to be worth it, people.
People are like, what are they
It's
doing?
going to be
Why?
worth what we're doing. Yeah, it'll be worth it. Believe me.
We're
trying out for a band.
Believe me. Yep.
I think we're getting fast tracked.
Who is the Spanish, or they did like the guitar, the brothers, the whole band of brothers, and they clapped in unison.
Ooh,
geez. No, nobody's pulling that.
No. Clapped in unison. Band of brothers playing guitar, and they're Spanish
or maybe South American.
Mike
Argentinian,
is the most Latino gringo I ever met.
Sí, señor.
Buenos dias. I don't know.
I'm sure you guys know this. I'm gonna look afterwards, and you guys all know it. Yeah,
Guitars.
super popular.
Super popular.
Probably played Red Rocks type popular.
Wow.
Yeah.
Why do I not know?
The Gypsy Kings?
Yes. Ross pulled it.
Los Lobos.
No, Gypsy
It's
Kings.
the Gypsy Kings.
Yeah.
Oh.
You know them,
Nice.
Johnny. You know their song.
Yeah,
At least one.
I didn't know they were. They clapped and played guitar, and I didn't know they were
It's the
Spanish.
power of Red Rocks. I said that, and Ross
Gypsy
knew
Kings.
it. Yep,
Thanks.
Gypsy Kings.
Ross, you're the best. I'm so
I
glad.
saw him
you got-
back. I saw him there back in '87.
But they clapped in unison a lot as part of their music, performance.
I'm very glad we weren't sharing a mic so you can get that in.
Yeah.
Thanks for being with us. Thanks for dealing with our nonsense. Always remember, Florida Talk Real Estate is .com, your one-stop real estate shop. Pros. You get them all. One click away, FloridaTalkRealEstate.com. Find us on Facebook and YouTube. Know it, use it, love it, share it. Change lives, including your very own with the pros of FloridaTalkRealEstate.com. Like Mike Rao, the mortgage guy from the mortgage firm. Have a great weekend.
Okay, you too. Thank you.
Thank you. Ross Komarinetz with Brightway Insurance, Juno Beach. Thanks for sharing the mic, and I hope you have an excellent weekend.
Thank you. I'll do my best.
Please do. And Jimmy D, will you do your best to have a great weekend?
I am. I'm going to try. I'm driving up to Tennessee.
Oh, well, safe
Yep,
travels,
it's
my
gonna be a
friend.
12-hour trip.
Yeah.
Yep.
I hope it's nice and smooth for you.
Yeah, me too.
Listen to the locker room.
We'll
That's
see what
coming up
happens
next.
in Atlanta.
Yes, that's always the fun part.
Yeah.
Florida Home Pros, of course, always well represented. Jimothy, thanks for everything always.
Thank you, gentlemen. Have a great weekend.
Kick saving.